What's up, guys? Welcome back to the channel. Today, we're going to talk about something very important. This might actually be the most important topic I will talk about in this channel. The thing is that this particular topic, a lot of people try to run away from it. Nobody wants to talk about this topic, but I'm going to talk about this particular lesson. And believe me, after today's lesson, you're going to know how to react in the financial markets. What I'm actually going to talk about in today's lesson is losses. You can't talk about winning without talking about losses. As a matter of fact, I've been talking about winning of trades on this channel. I think since this year, I've not actually touched about the psychological part of trading and talking about losses. Since this year, I've been talking about wins, wins, and wins. But today, I'm bringing out my time and we're going to talk about losses, how you can analyze your losses and how you can move on after losing trades in the financial markets. The mistake beginner traders make when they approach the financial market is after watching free lessons here on YouTube, no one tells you that you're going to lose money. No one takes his or her time to explain the risks that comes with trading. That's why a lot of people lose interest in trading after losing few dollars in the financial market. And the thing is, if they were actually introduced the right way into the financial markets, telling them advantage and the disadvantage of trading in this financial market, I think they can stay a lot longer in the financial market. And I believe we will have a lot of profitable traders in this market. We're going to talk about losses. Now, if I actually want to talk about winnings or good results in the financial market, I can actually go ahead and talk about it because the market always presents good results in the market. And lessons to talk about are always presented in the market. And if you look at the VIP, you see we equally have good results from the students. This is actually one of my good students. His name is Collins. This particular one he missed. And you see this one price tags him in and he equally won on another trade right here where he hit his profits. Now, if I actually want to talk about wins, I can go ahead and talk about it. But no, let's not always focus on the profitable parts of trading. Let's talk about losses as well. Now, losing trade in the financial market is inevitable. As a matter of fact, losing is part of the journey in this financial market. While losing trades can be frustrating, it also offers valuable opportunity for growth and self-improvement. If you actually take your time to analyze your losses in the financial market, you will agree with me that you're going to improve in your approach in the financial markets. Now, I took 4 good trades this week. The fact is that I'm yet to make profit from the 4 trades I approached this week. Now, I'm going to use it as a lesson. Now, this particular topic, when we talk about it, no one wants to listen, no one wants to watch the video. Now, I'm going to offer you this for free. Watch this video till the end because this is going to offer value, okay? Trading is not all about winning. We equally lose in the financial market. And someone might ask question, do mentors lose in the financial markets? Now, the thing is that professional traders, they lose the most trades in the market. I actually made a post about this today. And this also reminds me my favorite quote, which is that I'm a trader, I'm a human, I'm not perfect, I'm not a god. Yeah, you need to understand that you're a trader, you're a human, you are not perfect, and you are not a god. Now, when you understand this, also try to understand that losses you cannot escape in the financial market. Now, let's analyze the 4 trades I approached this week and see how it played out in the financial market and how we lost in the financial market. Then you can take your lessons from there, and I'm going to give you some important tips which you're going to improve on, which will help you become a profitable trader. Now, let's start from this particular one. This particular one, I looked at this particular pair and I have interest in trading from this pair, but the thing is that it didn't give me the results I was actually looking for. Now, if you try to look at what price is doing on this particular pair, what are you going to notice? Price has been in a downtrend, and you can agree with me that this is the exact same procedure we take while we analyze the market. Price is in a downtrend, and this is NZD card, the 1 hour time frame. Now, looking at what price was doing, price was breaking structures to the downside. You see, we have a break of structure to the downside at this particular area. You see, once we identify this break of structure, this also helps us understand that the price is bearish in this case because price is breaking structures to the downside. You see, we have another break of structure to the downside. Now, when I talk about one of my favorite trading pattern, which I always approach when I look at the financial market, you see, we have a liquidity sweep pattern. Now, a lot of time when I identify this pattern in the market, it gives me confidence to approach that particular trade. Now, at this point, I was able to select my points of interest. So selecting my points of interest, I think I selected this area right here, looking to trade from here. Not only that, I equally have this area as my inducement area. Now, if you look at the criteria, we look at when we approach the financial markets. You can agree with me that this particular trade opportunity meets the criteria. We have liquidity sweep, price break structure to the downside, pricing efficiencies, inducement. Now, these are points of interest, and it's a very good point of interest if you look to approach the market. Now, when price returned back to my point of interest, let's try to play price forward. Now, you see, price returns back to my point of interest, and I was actually tagged in because I got involved in this particular trade opportunity. Now, price tagged me in, and as always, I placed my target. Now, where is my target? I usually go for 4% in the financial market. Now, this is where I had my 4%. As a matter of fact, I think the way I marked this zone is not correct. Let me see the correct marking of zone when I analyze the market. So let's try to identify that right now. This is what the pair looks like when I marked my zone. So I have to go back to that particular example right now and refine how I marked that point of interest. So refining how I marked my zone, okay, I included these areas right here. You can see I tried to include some of this week when I marked my points of interest. So when I actually got my entry at this particular area, I had my profit target because as always, once I get my entry in the market, I just place my stop loss and take profits, then overlook whatever price is doing in the market. Now, I placed my target. Here is my profit target. This low is my profit target. And as always, I was expecting price to come back to this area. Then I'm going to take my profits. Now, price tagged me in, and it was actually a smooth trade, and it was a good ride. Now, at this point, you see price hit this particular low, giving me about 2.4% in the market. Now, when price actually gave me 1:2, when price was around this particular area, what I basically do is I had to move my stop loss to break even because this has been my approach in the financial markets. Now I moved my stop loss at break even. So if price comes back to my break even, I don't lose anything on this trade. But if price continues, I got to make money because price is already in profits. This is one of the approach I use. Now, plain price forward, you see price comes back to my break even, tags me out of the trade, and what can you see? Price continues moving to the upside. So on this particular trade, I didn't actually lose money on this trade. The thing is, I was tagged out at break even on this particular trade. Now, one lesson you need to learn from this particular setup is, because this is what I'll be doing when I show one of the setups, I give you 1 or 2 lessons, then we move on to the next one. Now, one of the approach I would like you to use in the market is the approach of break even. And break even means that once price gives you profit in percentage, and this actually depends on your risk to reward ratio. So I usually go for 1:4 in the market. Now, when price gives me 2% in the market, I usually move my stop loss to break even. And sometimes when price hits my profit, I can actually look to move my stop loss depending on how promising the trade looks. Now, this is one of the approach you need to use in market, because if I didn't actually use my break even at this particular area, I would have lost money on this particular trade opportunity. Now, another thing I want you to take away from this trade is that you shouldn't fight back. Don't fight the market back, because a lot of traders, maybe let's assume you actually lost money on this particular trade. You're looking to short the market. Now you see price reacting to the upside. You're going to see a lot of traders who are impatient in the market since they couldn't make profits from this particular trade. You're going to see them trying to fight the market back. What are they going to do? You might see them trying to enter their buy position in the market. You see them trying to buy, being impatient, trying to fight back, trying to get their money back, trying to make stupid decisions in the market. Now you see them trying to buy because they lost money trying to sell. These are traders who don't have rules, who don't trade with rules. Now, if you trade in this way, breaking rules, I'm telling you, you're still going to lose a lot of money in the market. My advice is this: once you lose money, don't fight back. Don't make stupid decisions, and don't try to revenge, because what you are trying to do is you're trying to revenge the market. And if you try to make this kind of decision, I promise you, you're going to lose money. Now, let's press price forward. Now, what you see, boom, price starts to drop to the downside. Now, imagine you being a trader because you lost here and you're trying to maybe get involved right here to ride the buy, you see price comes back, tags you out of the trade, and you're gonna cry. You're really gonna cry. Tears is gonna drop from your eye. So don't try this in the financial market. When you lose, you can leave your screen or you focus on the next trade. Don't try to revenge when approaching the markets. Now, let's see the next trade opportunity. Let's see the next one, which I approached this week. So this is the second trade I approached this week, and this particular one is AUD card, and this was on the 2 hours time frame. Now, when I was looking at this particular chart, it looked promising because it meets the criteria I look for when I'm looking at the financial markets. Now, you see, price is bullish. Price is moving massively to the upside. At this point, price shifted in structure and it starts to drop to the downside. This made me, I had 2 points of interest in this particular area. Now, let's analyze this once more. Pay attention. After explaining this chart, I'm going to give you an important tip, which is actually going to help you become better in your trading. Now, at first, when I was looking to spot my first point of interest, I saw that price swept liquidity underneath this low. Not just sweeping the liquidity underneath the low, price went ahead to mitigate this low right here. I hope you can see that. You see that mitigation. This gives me the confidence that we are in a bullish order flow. Now, price react to the upside. We have to break off this particular high. This also improved the probability of our zone playing out. We have some pricing efficiencies, and I was able to mark my demand zone in this particular area. So this is the first point of interest which I marked. After I marked these points of interest, I also have another area which I was looking to trade from. Price shifted bearish at this point. You see, price breaks underneath the low. You equally have the break of this particular low. Now, I had the second area which I was looking to trade from, which is this particular area right here. So I had these 2 points of interest and they looked good, and I looked to approach this particular trade. Now let's press price forward to see how this plays out, because I actually look to get my entry from this particular area, my entry right here, stop loss underneath the low. Then I can actually go ahead and place my targets. I usually go for 4%, so I look to get involved here. Now my instinct in the market, if price is able to mitigate my demand level, then I'm going to disregard the supply level. But if price mitigates my supply level, I can actually look to go ahead and trade from my demand level. So let's press price forward to see. Now price came very close to my point of interest, a reaction to the upside, and finally price blasts and moves to the downside. You see how price reacts and tags me out of the market. Now, when you lose money in the financial market, it's actually very frustrating, and you're going to see a lot of people making random decisions. Now, I lost money on this particular trade. Since I have second points of interest, what I should do at this particular point is to wait for price again. Just like I always advise, wait for the next trade opportunity and don't look to revenge. Now, print price forward to see what price presents. Now, price reacts to the downside. And finally, price has now mitigated a level. And this is the current price action right here. I hope you can clearly see that price is currently respecting this supply level, and price is offering close to 2% on this particular setup. Now, this is what I want you to take away from this particular trade opportunity. I know I advise you that when you lose a trade, don't try to revenge, that you should take your time, and when you see other trade opportunity, you come back to your screen and take that trade. Now, I want you to do that. And a lot of people, when they lose a trade, what they encounter in the market is you see them being afraid of placing trades in the financial market. You don't have to be afraid of placing trade, because since you understand the risk associated with trading, why are you then afraid to trade? Why are you running away from trading? You shouldn't be afraid of taking risk in the financial markets. Approach the markets and approach it without fear. Now, the thing is that after I lost money trading from the demand level, I couldn't approach price when it approached this particular supply level. Why? When price approached my supply level, it's not included in my trading session. Price approached the supply level during the ASEAN session, and I don't usually trade from the ASEAN session. Now, don't break rules, okay? Just because you lost money trading from the demand level doesn't mean you have to break a rule to trade as quick as possible to make your money back. Another thing I have to advise you is you should play defense while you are in the financial markets. Let me show you the next trade I took. Then I'm going to explain more about playing defense in the financial markets. Now, the next trade I actually approach is on gold. So this is gold, and this is on the 1 hour time frame. So you can clearly see that gold equally meets the criteria which we look at when we looking to trade from the financial markets. You see price sweeps liquidity, which is a very good trading pattern and style. We equally have the break of this internal structure. And when I marked my point of interest, this is what my point of interest looks like. See, I marked this particular high and I look to trade from here, expecting that price is going to tag me in and I'm going to trade to the downside. So this is the trade opportunity right here, expecting to go for my 4% as usual. Now, at this particular point, price actually tagged me in, and this particular one, you see, price tags me in, and it's good reaction to the downside. So if you are actually following me on Instagram, I actually shared the screenshots when I got tagged in this particular trade. But as always, you need to have an expectation, because you don't always have to win all the trades. Now, currently, what is price doing? Price is reacting to the upside, and price is currently approaching my stop loss in this case. And I'm very, very sure that price is going to hit my stop loss, because you see the momentum of the market has changed already, and price is approaching our stop loss in this particular trade. Price is approaching your stop loss does not mean you have to close your trade. You have to stick to your rules. Yeah, when I approached this market, I saw something which made me approach the market. What did I see? I saw my edge in the financial market. I saw what always gives me money, because this particular trading style gives me good money in the financial markets. And at this point, I saw it and I approached the market. Now, since this has been making me money in the market, and at this point, it's failing to do that, it doesn't mean that I have to close my profit and run. Now, imagine me closing my profit at this particular point and finally price drops and hits my target. You see, I'm going to regret this. So my advice for you is, no matter the circumstance, no matter what you've seen in the market, don't cut your trade short. You saw your edge in the market before you approach the trade. Then don't close till you are tagged out of the market or price hits your target. Now, I talked something about playing defense. Now, if you're a trader, one thing you have to embrace is risk management, because risk management protects your trading capital. Risk management is your defensive backup in the market. This is just like when you're playing football and you don't have a good defenders. Let's use Arsenal as a case study. Now, imagine Arsenal doesn't have good defenders like Saliba and Gabriel. You're going to see that even though they score a lot of goals, they're going to concede goals as well. Now, when you have a very good defense, when you make good profits in the financial markets, this is going to help you protect your capital. So when you lose a trade, you're not going to lose all the money. A lot of people in the financial markets, when you see them winning a trade, you might see them winning maybe 5 to 10 trades in a row. Now, when they win all these trades, by the time you see them losing 2 or 3 trades, you're going to understand that they're going to lose all the whole money they made in the markets. Some people go as far as blowing up their trading accounts because they don't understand risk management. Now, when you understand risk management, you should understand that you should be risking just 1% of your trading account. Risking 1% of your trading account means that you can trade and trade and trade. You can actually lose up to 20 trades in a row without blowing up your trading account, because you understand risk management. And not just understanding that you have to risk 1% of your trading account, but understanding that you need favorable risk-reward ratio. Your risk-reward ratio is actually going to help you make good money in the financial markets. Now, let's assume that the gold setup fails, and the last trade which I lost was on Euro CHF. So the Euro CHF pair, I think I was trying to trade from this particular low right here because price was bullish. You see the internal structure was bullish. Then I tried to trade from here, then I lost. Now, let's just try to do the calculation. I got the first trade was actually a break-even trade, and I've lost 2 trades already. Now, the gold setup, I'm about to lose it, which is going to make it trade. Now, you see, this week I lost 3 trades. Now, if you have favorable risk-reward ratio like I do, I lost 3 trades this week. By next week, let's assume the first trade I'm going to take, I approach it and it's a win setup for me. Once I win that trade, it's going to cancel out all my losses for this week, and I'm going to be 1% in profit. Why? Because I'm using a favorable risk to reward ratio. Now, it means that winning one trade is going to cover for my losses, and I'm also going to be in profit. So My assignment for you is go back and study risk management, and it's going to help improve your trading style. And another thing I have to advise you to do is don't trade the whole of the day, okay? I know that trading is a business. You have to approach it like a business. Yes, you have to do that, but don't trade the whole day. Take a trade, you take a break. I hope that makes sense to you. Now, this is what you have to take away from today's lesson. When you approach the market and you lose money in the financial markets, don't fight back. Don't make stupid decisions, and don't revenge the market. Secondly, with risk management, it's almost impossible to blow your trading accounts. Just like I said, you have to play defense, okay? Be a defender in the financial market. And another thing is take pictures of your losses. This is something I forgot to talk about. You have to take pictures of your losses the same way you take the screenshots and the pictures of your winning trades. Go ahead and take the pictures of your losses. At the long run, you're going to identify the trades which doesn't give you good results. Then you look to disregard that. Okay. So thanks very much for watching this one. I hope this lesson makes sense to you. I'm Solomon of Wisdom, and here is Born to Trade. Thanks very much for watching this one. See you in the next lesson.